Bombs are falling, cities are burning, people are suffering. And yet, the stock market is going up. How is that even possible? Is the system broken? Or are we missing something? When we think of war, we think of destruction, loss, and economic collapse. So logically, stock markets should crash. But history tells a different story. In many cases, markets fall before war, then rise during it. Let's uncover why. Take World War II. When uncertainty was at its peak, markets were volatile and fearful. But once the war fully began and the US entered in 1941, the market didn't just survive, it started climbing. Same pattern during more recent conflicts too. So what's going on behind the scenes? Markets fear the unknown more than bad news. Before a war, no one knows what will happen. Investors panic, prices drop. But once war starts, the unknown becomes known. Now governments act, plans are clear, money starts moving. And investors, they adapt fast. War triggers massive government spending. Think trillions of dollars injected into the economy. Example, during the Iraq War, US defense spending surged, and companies like Lockheed Martin and Raytheon saw major growth. More spending equals more contracts. More contracts equals higher company profits. Higher profits equals rising stock prices. It's that simple. War doesn't impact all companies equally. Some industries actually benefit. Defense companies, weapons, military tech. Oil and energy, prices often spike. Cybersecurity, digital warfare rises. Infrastructure and logistics. So even if the world looks chaotic, parts of the market are booming. Here's the most important idea. The stock market is not about today. It's about the future. Investors are always thinking, what happens after the war ends? Rebuilding economies, new technologies, stronger industries. So they start buying early before recovery even begins. War accelerates innovation. World War II helped advance radar, jet engines, early computing. The Cold War gave us the internet, GPS. These technologies later created trillions in economic value. And smart investors try to spot this early. But don't misunderstand this. War is not good. It brings human suffering, economic damage, long-term instability. The stock market rising doesn't mean the world is doing better. It just means capital is flowing and investors are betting on what comes next. So if war is bad, why do stock prices go up? Because markets don't run on emotions. They run on expectations, money, and future profit. And sometimes that creates a reality that feels completely disconnected from the real world.